Hey, what's up you guys? This is Junior Trader, and in this video we are taking a look at Tesla stock options analysis. So let's identify where the traders are betting their money, and as you saw in the thumbnail of this video, some traders on the short side are betting puts at a very critical level. That is this zone of 203 to 200 days moving average. Now, the importance of this zone I have talked about on my channel, technical video on Tesla that I have done, that only this zone can save Tesla now. So if you want to know technical reasons behind why this level of 200 days moving average, and not just 200 days moving average, but also this area of 203, why this holds its importance, then it's very important that you check out that video of mine. I'll still provide very high level glimpse into that here as well, but most importantly, we'll just be focusing on the options data here. Also, don't forget to check out my dividend investing channel. I'm building a public facing portfolio, and all that buying that I'm doing, my dividends, progress, portfolio updates, everything I provide on this channel. If you want to follow along, please subscribe here and like here as well. Link to this channel is in the description of this video as well. All right. Now, so just very quick, I want to first show you why this very quickly, $203, why this is very important level. Because this is where on the weekly interval, this inverted head and shoulder pattern that we have, its neckline is right around here. This is that zone, 203 area. So that's why it's so it's up and down, right? $201 to $203 area, the box area, right? So that's why it's important that this is the only zone that can keep Tesla on the weekly interval bullish, because if we lose this, then it's a big problem for us, right? But anyways, now, more on the technicals is in that channel, in that video of mine, the video that I pointed you to in this channel, very particular, what Tesla in-depth technical analysis. Now, on the option side, so red are the puts, black is the last trading day closing price, green are the calls. Right off the gate, we do see high density of puts. So the range of the price here on the chart is from $150 to $250. Puts, $200 puts, a huge spike right at that critical structure of the break, almost there, right? $200 puts. Wow. So a lot of traders have bet their money on this break of the structure. Now, I don't know their thinking process. I don't know if they have seen, if they are doing this technical analysis on their own, that $200 is a very critical, important level on the structure. If we break it, then we really break it. But unless we don't break it, this holds as a huge significance, right? So it's very simple at $200. Either they're going to make big or they're going to lose big. That's pretty much what I can say. So Tesla is right very close to that. If it loses 200 days moving average and it loses $203, well, yeah, 200 puts will make the money, but not just that. That opens up the whole Pandora box of breakage of the structure on the weekly interval on Tesla. So that's what I would like to say about this $200 puts today. I'll provide a tradable range. What are the possible zones that Tesla might, float itself around this week. So, but yeah, that's though about $200 puts. As for the upside, we do have calls at 230 and 250. Other than that, it's mostly just the put, still quite high up there. So how about we talk, we talk about these first $230 calls. Is that a possibility this week? So where's 230? Let's move this thing up there, 230. Look, technically it's against the structure right now, right? Tesla structure is still to the downside. 230 will have to go to the hourly interval now. 230 will only may come into play if Tesla, very important though, by Monday if it gets above 212. If Tesla can do that, we are still not out of the woods fully yet. By Tuesday we need to regain 218. If by Tuesday we can regain 218, then by Friday 230 is a possibility on the call side. Otherwise, no. Right now, structure is not in that direction. Oh, sorry, 230 is not in that direction, right? And 200 hours moving average will also come below that by then. So I would still say it's out of reach a little bit. 250 is definitely, I don't think this week it's a possibility. $250 calls. No, I don't think that's going to happen, guys. Sorry. Yeah. Now, so that's that. We do have puts down there, but I think it's more just about now talking what are the possibilities of the tradable range, and accordingly, any options in that range are safer to trade, right? So let's talk about that. Now, Tesla does the average range. Right now, it's doing average range of $13 to $10, right? 13 is the average range, and then $10 was the last day trading range. So let's give it $10 range, right? Now, Possibilities to the upside will only come, as I said, if we get above 212, but since it's against the trend, right now we will exhaust a lot of energy in first establishing a trend here and then go up. So the days are counting against you if you want to trade the upside. So $10 range, let's say if 3 days it goes up, 2 days goes down in this uptrend, then $30 range, right? So $30 from right over here where we are, yeah, it puts you around 238, but I don't think that's going to happen because the energy would, again, this is only if $10 it just goes straight up, right? It's a range. So it's like it can do a range, then pull back as well the same day, and then the next range, right? So you can see there's a half of it is already gone. So we'll have to take a possible range of like a straight line up to maybe $20. Yeah, sorry, I should have explained that properly first. So I would still say, yeah, until the safest range, provided we break the levels to the upside, these levels like 212, the safest range I would say would only be until 228 or 230, give or take, right? And then to the downside, right? The downside, since we are already in that direction, it all comes down to if Tesla can hold itself above this 203. But if we lose that, then if I just take $20 down from here, almost, it brings us to 185. And that's likely as well. Oh, sorry, guys. And that's very likely as well, 185 area, because then that's where we have the area of some consolidation. So I don't want to bet below 200 right now, but yeah, if it breaks 200 and days moving average closes flush candle down, yeah, the structure is just not there then, guys. And 185 may happen, yeah, but if by Monday we just straight break just $200 level, right, and 200 days moving average area with $203 level as well. So the range, if I would want to provide, is somewhere maybe $230. If it continues to go above 212, then to the downside below 200 days, moving average will be 185 area. So this is the range I would give that this week potentially. It's the safest range to trade. Again, not saying that it's going to hit both sides, but what I'm trying to say is that provided the levels continues to break to the downside of those important significant levels, or we start to regain the levels to the upside, that is 212 and 218, those are the upside and the downside range. The safest range based off of those levels, in my opinion, are tradable, and accordingly options decisions can be made, based off of that. And that's pretty much it for this video, guys. So if you found it helpful, valuable, please hit the like, subscribe, and I'll see you in my next videos, guys. Take care. Bye.